Hello, I am Lisa J. Stocks. Thank you for tuning in for today's Stock Talk episode. And we're going to be talking about making investing less scary. And this might be one for the beginners, but some encouragement for us veterans also, because September might be a scary month when it comes to our investing and looking at our portfolios. So, first, let me say happy Labor Day weekends. I hope that you guys might have a day off tomorrow or have, a little something extra to look forward to as we come to the unofficial end of summer, that the kids are back to school and everything is going well for everyone. Are you able to hear me, see me? Is everything going through okay? Let me know. So, as I said, we're going to be talking about making investing less scary today. And I was inspired by this because I'm often seeing questions about, the market is rocky right now and things are crazy right now, as though it's not the right time. They want to get into investing when everything is flourishing and, but at the same time, they hear all-time highs and that turns them off too. So I just want to just give some encouragement and just talk about not being scared of investing. Thank you guys for chatting. I guess everything is coming through okay. Thanks, Nija and Anthony, Miss Priceless, Commander, Eddie, everyone who's tuned in so far. Okay, so September, historically, one of the toughest months with volatility. And some say that these following days after Labor Day, especially, have been times that are very unpredictable when it comes to the stock market. So let's see. We're going to go through about 10 different things. And of course, we're going to have some open chat on, whatever we're discussing, whatever the points that we go through today. Let me know your thoughts as we go along. But the first one, it's a basic one, having that emergency fund. And starting off little by little. I was on a live a while back with one of my channel members, and I don't know I can't remember what she thought I was going to say, but what I encouraged her to do was to get to having one full paycheck in her high yield savings account. And I think that should be a starting point for all of us. If we're not there already, or if, our kids, if they're old enough, if they're working, people around us, that is the first thing I want to encourage. And that's just so that you can officially say to yourself, you don't have to let anyone else know, but you'll officially know that you are not living paycheck to paycheck, that you are on track to bail yourself out if something does come up. And happy Labor Day weekend to you too, Vincent. And thank you for that super chat. I appreciate you tuning in, being a channel member, and always supporting. But yes, that first paycheck, and then from there, continue building so that we can get to those milestones of 3 months of expenses, 6 months of expenses. And you really need to take your time and put some thought into what your ultimate goal is when it comes to having emergency savings, especially with all the layoffs going on right now and it not being a space where you're getting a job as quickly as we used to in the past. And that's my opinion and my personal experience. And, make sure that you're having that emergency fund because, of course, as I always say, then when you run into an issue, you're not leading into the other problem that leads to, which is the credit card debt that you're in because you're then carrying it because you don't have enough extra cash to pay off your cards immediately. So next thing I want people to do to make sure that they're not scared after having that emergency fund is having a clear goal as to why are you investing? What is it that you're trying to do? We all know if we work in a place where I forgot to look this up. I had this on my mind last night. The statistics on how many people work in a place that actually provides a 401k or 403b or something like that, as opposed to those who have to take on that responsibility for themselves because their employer doesn't have that built in for them. But what goals do you have when it comes to your investing and your saving and building your wealth? Is it strictly retirement, or do you have other goals? I think retirement is the one that I always encourage people to have as their first primary goal that they need to focus on. But you can have other goals related to, having investments that you can tap into before that 59 and a half age. But it just needs to be clear. You need to make that outline as to, I'm investing for my retirement, I'm investing for my children's higher education, whatever it is that you need. Before, it wasn't too long before I started my channel, just a few years ago, that I even was hearing about FIRE, financial independence, retire early, and this whole FIRE movement, and the intention of people that had that goal of having their retirement that is for their true retirement age, but building up and seeing what they could create for their retirement number. As I always say, retirement is not an age, it's a number. It's getting that to that amount where you are ready and comfortable and able to say, okay, I can pull back. I don't have to be beholden to corporate America or whatever your employer is any further, because I've achieved what I needed in order to move forward with making that leap of, I am retired now, no matter what age you are. And so set those goals for yourself, and then you need to set them as far as what you're investing for and what the numbers that you are trying to achieve. So thank you, Sirius, for grilling and listening. I know it's a holiday weekend. Again, happy not Memorial Day, Labor Day weekend to everyone. So on to tip number 3. And I will be going back through the chat to see if there's any questions, comments. Make sure you feel free to comment on any of the points that I'm sharing to let me know if you agree, disagree, anything that you want to add, or if you've done some of the things that I'm going to be touching on. So, in when I'm talking about these goals, it doesn't have to just be, those type of financial goals. It could be something small, something big. I mentioned, some of the bigger ones, retirement, the investment accounts for the kids to get them off to school, give them a head start. But, who knows? In my investments, it's just an avenue for me to make my money grow at the maximum potential. And then what I move forward with doing with it, I know I did my best in order to get myself on track for whatever my goals are. So now on to tip number 3, which is keeping a long-term mindset. I think I'm going to do a separate video on kind of reflecting on someone else's video that I watched recently. I mentioned it last week too, where she has basically, she was sharing that she lost $10,000 because she sold her investments while they were down. And, I have to go through that. I look at my investment accounts on a regular basis. There are going to be times of the year, there's ups and downs when it comes to the market. And it might be a pretty long stretch of time. Sometimes it's months of seeing your investments down. But what I've done through those times, and I really want to go in depth with this particular point and show the time frame when she sold her investments. But you really have to zoom out and really reflect and know that you put the research into what you added into your portfolio, because everything that she cut from her portfolio, there was just really no reason to. It all recovered. We were just going through a hard stretch of time. And this is what someone who's newer to investing right now in the month of September, October, when the markets may pull back. We've just been through it. If you're kind of newer to investing, I don't know how much the way we went through that huge pullback back in April with Liberation Day and all this tariff stuff going on and the threats of war not too long after all that stuff that was going on. Did that make you want to, stop investing, slow down on your investing? For me, it made me invest more heavily because I could see that certain investments that I was still in that building phase that I wanted more of were significantly beaten down. And I said, okay, I'm going to invest more heavily now so that I can reap the rewards when this particular investment, whether it was an ETF or individual stock, recovers. But that's because of my conviction and understanding and belief in the fundamentals of the company. So let me move on to tip number 4, which I just touched on, which is doing your research before diving into an investment so that you can have that as a part of your, peace of mind and be able to just see the turmoil going on when it comes to the market, but know that this is a company that has proven itself. They're not new. They didn't just have their IPO. They could be going through a serious issue like Microsoft with the antitrust or the the monopoly issues that they're going through, or just so many things. The tariffs are affecting so many different companies, whether it's Amazon. I'm seeing so many even much smaller companies saying that it's really a struggle right now with importing goods and dealing with the cost expense of that. So depending on what company it is, whatever the particular issue that they're struggling with, I don't even want to get into Tesla struggles, but is it a company that you think in time will be able to manage to get through them and still be a thriving company going forward? And when it comes to those, top 5, 6 companies in the US, I believe in them all, that they can get through their issues and continue to thrive. Maybe not for the next 25 years, but in the next in the next decade at least. But I'm a person that keeps an eye on their portfolio anyway. So if something does drastically change, I'll be ready to make that shift. And let's see. Hey, Kevin, thank you for tuning in. Now on to tip number, where was I? Number 5. It's okay to start small. Now, you don't need to put a huge amount of money on something if you're not comfortable yet, but starting small might be the way that you can ease yourself into it. Open up an account, fund it, even if it's you put $100 and then you use that $100 to invest, just say $25 a week, just to get yourself used to it, get yourself adapted, pick out what your investments are going to be, and just get consistent with it and get yourself comfortable. If you're newer to investing, it's okay to start small. These accounts nowadays, the brokerage platforms, you're not going to be overwhelmed with fees and different obstacles when it comes to getting started with investing. And you definitely can start with a low amount of money. Let me see what Anthony is saying here. Since no one won the lottery for $1 billion, what are your thoughts about buying a lottery ticket versus investing? If you want to, I'm okay. How much are those tickets now? They used to be 2. Are they now 5? I'm not sure. If you want to treat yourself to a lottery ticket this week, I am not opposed to that. but I want much more than $5 going into your investing if you treat yourself to that $5 ticket. Um, there's still $2. Okay. See, I did not buy a ticket. I did not help that lottery pool get up to the billion. Yeah, I think you have to find a balance. You wasted $10. Uh, you have to find a balance. I'm not perfect. Of course, I try to make my coffee. I try to make sure that, I have groceries and things like that. I'm okay with a little indulgence, but I would hate for anyone to be every, I think that one is twice a week. I don't want to hear that twice a week you're playing the numbers. Treat yourself for the $1 billion ticket drawing. Treat yourself to 2 tickets, $4, but I want to see 400 going into your investments. I want there to be a drastic difference when it comes to those two. But if you can leave it alone altogether, then try to do it that way, because what are the odds? But if you feel like you have to be in it, you can't win if you don't play, then go for it. But I've used that saying in my videos related to investing. You can't win by building up your portfolio, building wealth, if you're not investing into, good sounds, ETFs, dividend paying investments. There's no way for you to be on this path to build wealth if we're not doing the things that I'm talking about here. Having that high yield savings account, taking on, all the steps and potentially what you might think is the hassle of getting these things in place in order to build up our money. So now let's go on to tip number 6, which is ignoring the scary news headlines, whatever you interpret as scary. Now, like I was saying, all-time highs. The S&P 500, this particular investment. I know one of my investments, the S&P, I'm not sure when last, but VTI, it must have been Friday, hit an all-time high on Friday. And it's just, it's not the end of the road. Another statistic that I didn't pull ahead of the live, but how many times have these companies hit all-time highs? How many times have these indices hit all-time highs? We just have to keep on going and move forward. Put the work in, know what you're investing into, and keep on going. Don't let that slow you down as though all these different things. I don't want to mess up the average of, where I'm at with my investing so far. All these different things that can hold you back. Don't let them be scary. And don't turn a blind eye to your investing once you get into it. You can automate it, but if you automate your investments, make sure it is truly a set it and forget it type of investment that you are building into, like an S&P 500 investment, something very basic, not something that Stock Brother would be investing into, that you have to watch like a hawk, that you have to be on top of, and you have to be ready to be in and out to maximize all those gains. Thank you for tuning in, Stock Brother. How is that? I don't even know the ticker. ICC something. How is it going for you? Are you still in it? Now, those news headlines, you have to take them seriously. You have to have an understanding of what you're invested into, but don't let that turn you off. Don't think that the doom and gloom is permanent. But that's when the research comes in. That's when, if you're not up for taking on the responsibility of managing those individual stocks, you can get into an ETF that gives you broad exposure, that has a proven track record, that we know will recover in time. So Stock Brother saying he made a bag. I'm sure he did. But he knows how to navigate those penny stocks. So you have to do what you have the knowledge and you are ready to do. Now let's see. And I'm already touching on what I had down as tip number 7, which is having a simple approach. And that's what investing into an ETF is. An exchange traded fund, it's a basket of stocks. It could be 50, it could be over 3,500, but it's not one single investment choice that you're making there. You're choosing a basket of stocks that are going to be able to manage the ups and downs of the stock market a little differently because of it not just being dependent on one company. Now, when there is a huge pullback like we had back in April, yeah, you're going to see that same dip when it comes to the ETFs, but there are some companies it was going to take longer for them to recover from the issues that we had there. Should we shift our investments before or after CPI? I don't when you say shift, I don't know what you mean, Anthony, because you've asked me this when you've been up on panel with me of like me taking profits and things. If it's an investment, it's an investment. What I currently have invested is going to stay in place. I'm not, in a rush to take profits on things that just because I'm up, say, 60 or 70%, I don't necessarily take profit on it. I keep an eye, I'll set my alerts, I'll keep an eye on the price movement. And then if there is an opportunity, I'm still in the build. Really, I can't think. Most of my investments, I'm still in the building phase on. So I just, times like that, when there's different news that comes out that impact the stock market, I'll buy the dip, we'll say. I'm consistently investing, but when I have those opportunities, I invest more heavily. But I'm not quick to rebalance or take profit. And as far as rebalancing, I have let me take a second and talk about that Target stock. I'm always whining about Target stock, aren't I? Let me know when you get tired of hearing me talking about my Target stock. Is still looking sorry, but it is. It's down. My Target stock is down 35%. So yeah, not a huge position in my portfolio. It's only a little over 10 shares, but something I want to cut, but I don't want to cut it at that much of a loss. It's a company that we all know, we all use, that they've just been having issue after issue. So I'm holding on to it, waiting for it to, I don't know if I'm going to wait for it to be in the positive, but for now I'm still holding. But something that in time, I just can't seem to catch it at that point where I'm ready. Like I say, okay, it's not down too much, so let me cut it now, move it to something that I prefer. Maybe even something new. I don't have any Netflix in my portfolio, but I can definitely easily get that money applied over to an ETF, Meta, Amazon, another basic investment that has done well for me over time. Now I don't know where I was at. And Anthony's saying that makes sense. I don't even know if I made up my own question because I didn't understand Anthony's question, but let me keep going. Now, okay, so what was I talking about? Number 7. I think we were talking about going simple, being simple. Okay. So guys, let me know. Is anything that I'm talking about, do you think it's ever held you back? Is it holding anyone around you? Is anyone around you ever kind of talking about they're scared of investing, or is it the right time to be investing? Do you hear these? Are these the conversations that you have, or the people around you not even you're not in those type of spaces where you can even talk about this with friends and family? It's not a discussion that comes up. I'll tell you, for a long time, it really wasn't coming up with the people that I was around, and I was doing it, but I just wasn't talking about it. We weren't at brunch talking about investments and things like this, but it comes up now only because I have this channel, and some of my friends and family do follow me on Instagram. Maybe they don't watch a whole YouTube video, but they know that I do this and so a little bit more than ever before, these type of questions will come up. Like my friend, she was asking me recently, she had some car repairs to do, and she had enough money to pay off the car repairs once she put them on her credit card. But she said that she asked her sister, and her sister said, "No, don't pay off the whole amount. Keep a balance because you're trying to build back up your credit." And so that's what I would do. And so she called and she asked me, and I gave my opinion, and I said, "No, pay off the whole brake repair job, whatever it is, pay it off in full, and then get things lined up so that if this is the credit card, or if you have multiple credit cards, get things lined up so that, the grocery delivery, the subscriptions, your car insurance, your electric bill, anything that you have that you can have on a regular basis hitting these credit cards and then you paying off in full. I would have the activity going that way, as opposed to carrying credit card debt and paying interest just because you think that that's the way to increase your credit. That's how I go about it. I have a nearly perfect credit score. Especially, I've had some of my accounts have been open for some time now, so I'm checking all of those boxes. And right now, I have not, for the last couple of years, I haven't been carrying a balance. And I use my credit cards. I make sure to use all of them, have some activity going in and out, just like I described with my car insurance, the Wi-Fi, any type of utilities, the groceries. All of those different things I'm using my credit cards, but then I'm paying them off, and it's working for me because, my credit score is on point. 0 is a balance. I even interviewed someone from Experian about this. Okay. My friends aren't even trying to learn about investing. Oh no. Well, let's see. Okay, so where was I at? Target is a swing trade for me. It will bounce back. The one I think it will bounce back is just, yeah. I'm glad it's not a larger position in my portfolio, because my patience has run thin with that target. But yeah, like I said, at least it pays a dividend. But yeah, the weight has been a bit much, but I don't want to. So on my 10 shares, 10 point something shares, I'm down over $500. There's no reason. I'm over here. Yeah, I'm not gonna. I was referencing someone that I was watching their video recently, and they lost $10,000 because they sold multiple investments while the market was down significantly a couple of years back. But yeah, I'm not worrying about that, when on the other end of the spectrum, I have several investments that are up significantly. So I'm just holding and just collecting that dividend. Also on Disney too, at least they pay a little dividend while I'm kind of waiting for them to see if they can get things turned around. But at least I'm not in the red on my Disney anymore. But if I was to sell it, it would be at barely any gain there. So, hey Joe, do I have a stop loss on my target stock? I do not have a stop loss on my target stock. If I would have had one on, it would have been gone long ago. But I did not place one before it dropped this significantly, because when I added it to my portfolio, I was thinking of it definitely as an investment, not a trade. Now, right now, like Court, ticker symbol CORT, Corcept Therapeutics, and like Webull stock, ticker symbol BULL. Those are things that I have a stop loss set on, because those are trade status for me right now, even though they're regular shares. But yeah, I do use my stop loss on shares occasionally, but I'm not a big trader when it comes to that. I would say more of my trading comes through options trades, which of course I put my stop loss on as soon as my order fills when it comes to those. Even if it is the leap, I still, put on a stop loss. All right, so we got to tip 7, tip 8. Let me see. Tip 8. Okay. So yeah, tip 8 is basically you have to, like I was saying, you can't win if you don't play. You have to be in it to win it. So make sure that you're finding a comfortable place with the things that I'm talking about here. Don't let fear hold you back. Buy one share, take $100 and invest into a few things, get a feel for it. Don't do anything fancy. You can go and you can invest. You don't even have to mix it up into a few things. Maybe you can put $100 into the S&P 500 or into the total US stock market or into a true blue chip company that you know, like Apple or something like that. And get started from there, build your way up. It might be scaring at first, but you don't have to do anything that is, really volatile that you don't go into it thinking I'm going to lose my money. Now, there are ups and downs, like I'm sharing with you with the target stock, but sometimes you just have to give things time to get back on track and they go back up. Not everything, but with what I'm talking about, an S&P 500 investment, a total stock market investment. If you look at the charts, if you zoom out, if you go to the 5-year, go to the 10-year, you will see that yes, at times it does go down, sometimes drastically, but then it goes back up. And the concept that I'm trying to talk about here is that when there is going to be a month or stretch of time, maybe not even a stretch. Sometimes it's just a day when there's a particular pullback, a particular news catalyst, or something happens right after earnings, right before earnings. If there's an investment that the price is down, I take that as my buying opportunity on those investments that I have, done the work, have seen the progress that I've made so far, and I'm continuing to build up in my portfolio. But I just say all that to say that you just have to go for it and not be afraid. If you're working at a company, like I said earlier, if that 401k or 403b or some type of investment, is not built in for you, that it's going to be coming out of your paycheck, reach out to a broker, set that up for yourself. Don't just wait and just to be, before you know it, we're getting closer and closer to retirement age. And then we're stuck here completely dependent on Social Security or disability or some amount that is not going to be enough. And you wish you had that extra to supplement yourself going forward. So now on to tip number 9. And we've been touching on this. We don't have to wait until things get better. That concept that I was just talking about. We want to buy low and sell high. We don't want to wait till the markets are thriving and everything is perfect and then we invest. That's at the high. Now, depending on when you get started, that might be your starting point. A higher place might be your starting point. I don't want you to wait until there is a pullback, but you can kind of, if you choose to, I'm not a financial advisor. I'm just sharing my journey here, but I'm always investing. For every day that the stock market is open, I'm sure I make some type of investing. I at least do my, a little $10 into VTI or $10 into Microsoft. Right now, those are investments that I've been working on a daily basis. But with that, yes, I'm going to do my minimum amount that I have set, that I'm ready to do. I'm ready, it's designated, it's in my plan, it's set. But when I see a particular investment down several percent, however I have my alert set, I get that alert, and then I'm going to invest more heavily. I don't have to stick to that $10. As long as if I have extra in my budget, then I can do more. And that's what I do. Team VTI or VT? Oh, you're team VT? I can't quite make that out with those exclamation points. I'm like, what is he saying, VT or VTI? Okay. So let's see. Yeah. So with investing, yeah, waiting till it got better. I would say when it comes to investing, more so, I've had the situation of wishing that I invested more than I've had of wishing I didn't invest. Of course, there's going to be a few things in the mix that I wish I had chosen something different instead of that particular investment. But I tell you, when I think about it, it's 10 times more that I wish I invested more heavily. I wish I heard about this investment sooner. When it comes to like Nvidia, which I started investing into, I believe right at the beginning of 2024, probably the second of 2024. It was going to be a new edition. I'm going to start investing into Nvidia. This is before the stock split. And I was doing it, small amounts. If I would have known, if I would have realized the way it was going to take off, I would have just done a huge lump sum there. But I kept my eye on it. This is last year. I was able to catch it under $100, 93, 98, and just build up my position from where I was at. And if anything, I like I said, I've had, my story would be always, I wish I had invested more. So, all right, I only have one more tip. So let me just take a look at what do I think about SoFi? Well, SoFi, I've never invested into SoFi. I think it's $22 or so right now. I think it still has more room to grow, but that's one of the ones that people, those people that got in at $6 and $8, of course, they're thrilled and they're proud, and they've already quadrupled their money or whatever because they've been in it so long. Just SoFi, Palantir, those are stocks that I did not, I haven't been investing into. I've never invested into directly, but I think there's still room to grow. But like I said, those are a couple companies that cross my mind when I think that people think that it's too late. But whether it's that or even, bigger names like Amazon or Microsoft or, or Meta, everyone has a different starting point. And I still think that there's potential. There's going to be more growth, but your starting point is what it is. So for those who got in 6, 8, a long time ago, we're never going to be able to catch up to them. Just like we couldn't catch up to, if we started investing into Apple in 2020, we can't catch up to the people that have been in it since the 80s. So, but yeah, definitely wouldn't be a large allocation in my portfolio, but something that I think is a sound potential investment that still has growth ahead. I don't know if you were looking for me to say anything more specific, Eddie, let me know. So the last point I had was knowing your risk tolerance, and knowing the balance. So like for my daughter's portfolio, I do a mix of 80% into ETFs and 20% into individual stocks. I could do 100% into, the ETFs, but I felt like I had the knowledge and we were both in a place where I wanted to teach her a little bit more, and so I'm okay with mixing in a few individual stocks, but her portfolio, I mean, it's really thriving. I mean, it's a conservative portfolio, but because it's hers, I don't want to add anything in there that she does have Tesla in her portfolio, but it's been in there for a long time. But it's only 5% of her portfolio, and she even understands why it's only 5% because it is a more, volatile, turbulent uh, investment. And with Trump and Elon, their behavior, all the different things that affect it, never mind the discounting of prices and all the struggles that they're having. um so but I'm just touching on that because I'm talking about risk tolerance. And you don't have to chase hype stocks and penny stocks and random crypto and all the different things, um, unless you want to put the work in and you have an understanding of how to go about it and maximize what you are trying to achieve here. Like I would say, like I don't like that a lot of people use that expression of invest what you're okay with losing. I'm not okay with losing anything. So that's I'm trying to that's not the goal here. The goal is to make money. Now, there will be times when you lose, there will be times that you are down, but it's not a true loss until you sell it at a loss. And that is something that has rarely happened to me, that I have sold an investment at a loss. And that's and having the knowledge that I have, and being willing to put on that stop loss and potentially being out of an investment sooner than I thought, that's something that I have to take on, because I've been in the past years ago, I've been here stuck diamond handing something that I did not want in my portfolio any longer. So I'm going to stay on that track and keep that mindset going forward. If I don't want to take on something that I feel is a trade, then I'm not going to add it to my portfolio and just focus on my investing. And it's and I think that's something I also like to always touch on. Trading and investing are two different things, and you don't have to be both. You can just be an investor. I think years ago, before I'm glad that investing and trading is so accessible. Fractional shares, all of these different things, whether it's our retirement accounts or my taxable accounts. I have access to everything on my phone at anytime, but whether it's Fidelity or Webull, I can make a trade. I can look at my accounts all of the time. And before, years ago, when trading was before, I guess, the days of having Robinhood and these different apps even existed, when you had to physically go and there were so many fees and so many obstacles, and fractional shares, I don't know exactly what year all of these different things came into place, but before all of this was accessible, all I'm sure that most were doing was just contributing to their employer retirement account, and that was that. So that was the days of just being an investor. But now, because of everything and options trading and all the things that we're seeing here on YouTube, and on whatever different places that you're getting this information, some people are just going the avenue of being like pretty much 100% trader and not focusing on their investing. And I just want to encourage you to have a balance there, because it's only so long I could be going on with trading. I want to make sure that my trades are funding my investments. And if I don't want to trade at all, that I'm focusing on my investing and keeping a close eye on them in order to make sure that they are, that I have my goals in place. I know what I want to, I know what my expectations are as far as my rate of return and things like that. And so those are the points that I wanted to share today. And I don't want investing to be scary. I don't want anyone to think that investing is for the wealthy or the rich, or investing is for all of us, all of us. And another thing I want to touch on is that I was talking to someone recently, and I tying this back to investing, like in the household, the man of the house might mow the lawn and do the plumbing, deal with the clogged sink or whatever. I know everyone falls into different roles, whereas maybe the woman of the house is making sure that all the Target orders are placed and the groceries, and coordinating different things. We take on different hats and different roles, but when it comes to the money and investing and understanding, the insurance policies and when are the taxes due and all those different things, I think we both parties, or both everyone in the household, needs to have some idea of how to do it, because just in case, you need to be able to figure that out. And I was in a female investing group, and I hated seeing over and over. I would see that a woman in, say, their 30s was getting divorced or having some issues, and now they're divorced. They've never been working. They don't have a 401k. They don't know how to invest. They don't know how to handle the bills and things like that. And that's not a good place to be. So I think I was reading something recently. I was actually glad to see this, but I wish the 401k was not only accessible to your spouse or basically the government. Those are the only two that potentially can go after, like if you're in a legal issue. There's the only people that can get a portion of your retirement savings. But I think that some of these scammers and thieves out here, I wish that that a regular person could actually sue them for their investments. But that's all kind of off track of what I was here to share today. But I hope that everyone has a great Labor Day weekend. I'm going to continue to look back here at some comments and questions here. And thank you guys for tuning in. If you're not already, subscribe to the channel. Hit that notification bell, give the live a thumbs up. Check out my referral links if you are interested in opening a new account. Palantir. Palantir, I was mentioning it, I think, along with SoFi a minute ago. One of those investments that I wish I got into a long time ago and had been holding for some time now. But I don't, a good quality investment, but I've decided to focus on right now. NVIDIA and Taiwan Semi are my individual investments that I have decided to build into in that area. And I'll just be getting my exposure to Palantir through my ETFs, but I think there is great potential there still going forward. Now I saw Anthony said something. What's your hot take on investing? Anthony, I don't understand your question. Is there a typo in there? Palantir is your biggest winner. You must have been in it for a while then, Eddie, too, right? Wow. Yeah. Palantir and NVIDIA, those two alone, if only. If only I would have known. Come over to quantum. Yeah, Anthony, I would love to see your whole portfolio with the quantum and the gold stocks and all of that. I know you're doing your thing over there. But yeah, we need to talk again. I want to hear about your some of your more basic investments, or what is the balance between the quantum and, those regular ETFs over in your portfolio. Controversial opinion. I'm not a very controversial person when it comes to my investing. I think I'm a boring investor, and I'm okay with that. And I want everyone to know that they should be okay with that, and they can build wealth in that way too. But yeah, I'll have to think on that one. I'll have to think on that one, Anthony. I don't know. I don't know. Is it controversial to or is it I don't talk about it or do videos on it very often, and so every once in a while I get someone asking like, "Lisa, are you still holding your XRP, or do you still have your Bitcoin?" Yes, yes, I still invest into crypto, and I am still holding, and I'm still building, and um not nearly as much crypto in my portfolio as, those the ETFs, but at the same time, if I was more aggressive and willing, I what my portfolio what $120,000 into Bitcoin as opposed to FXAIX would look like today would be dramatically different than what I've built. But I had to back to points what I had the point that was risk tolerance, that I had to do what I felt I could sleep at night with, even though there is the existence of a stop loss. I've held crypto in my portfolio and seen it go from 60,000 down to 16 and now back over 100,000. But what amount of money could I have had invested and felt comfortable going through that cycle? So I had to I all of us, if we all of us, if we only had if we could only see into the future, we would all have a much different portfolio. It would be full of Bitcoin and Palantir and Nvidia a few years ago, and we would just be able to sleep well at night, and just, if we knew what things would be looking like in the summer of 2025. But we don't, and so we just have to do what we just have to create the portfolio and the risk tolerance that we are able to live with and deal with today. But guys, if you have any questions, this is your chance to drop them now. Let me know if there's any, let me know if you enjoyed this topic today, and if there's any topics that you would like me to cover in the future. And make sure to tune in on Sundays at 3 p.m. Eastern Standard Time. I do try to post to my community wall if I'm not going to be doing a live, but I try to keep to this time slot as, something different. I do put out videos and shorts throughout the week, but this is usually the chance to chat with me live. I only did a full open topic show once, and Anthony about that wallet was on the panel with me, because I like to have a topic ready so that I have something to chat about, and I'm not, completely dependent upon the chat, but I am also always open to your questions and comments. I love to hear from you. So if I don't see any more comments coming in, I am going to wrap it up for today. I hope you guys have a great rest of your weekends. And like I said, that you are off tomorrow. Enjoy the kids, enjoy the break, whatever it is that you have going on. And I will see you next week. And make sure, if you are interested, like I said, check out my referral links. And there are links for Webull, Moomoo, and Public for Investing, as well as Keenan Grace's Discord. I have an affiliate link over there also. So I will see you next week. Thanks for tuning in.
And to investments, she make a lot on YouTube. Lisa J Stocks. Lisa J Stocks, that's the channel. Hey. If you wanna make some money, visit Lisa J Stocks. Yeah. You will make a lot. If you wanna make some money, visit Lisa J Stocks. Okay. She'll make it pop. If you wanna make some money, visit Lisa J Stocks. Hey. You will make a lot. If you wanna make some money, visit Lisa J Stocks. Hey. She make it pop.